If you've noticed, I took a step back from providing my regular economic and market updates here. That was intentional. Last year, I found myself really burnt out by the online real estate world because apparently we collectively decided that every agent needs to become a full-time content creator while also, actually selling houses. So I took a little break, redirected that energy back into my clients, which turns out is still the most important part of this job. I even started practicing art again back in November just to clear my mind and reset. But I'm back because right now, national headlines are incredibly confusing and everyone can report numbers. The real value comes from understanding what they actually mean. This is why I've personally always just focused on what the data is telling us. So let's break it down. We'll start with the big picture because what happens nationally affects us locally. The Fed's primary inflation gauge, the core PCE index, came in recently at 3.4%, which is the highest reading we've seen since late 2023. Because inflation isn't dropping as fast as hoped, major forecasters like Wells Fargo, the Mortgage Bank Association, and Fannie Mae predict mortgage rates will hover between 6 and 6.5% all the way through 2027. That's actually good news because it gives buyers and sellers a much more predictable environment to make decisions. We're no longer seeing the wild daily volatility we endured a few years ago, and that stability allows you to make rational, calculated moves instead of emotional ones. It will be interesting to see what the Fed does at the end of this month with the benchmark rate. The CME FedWatch tool currently has odds in favor of a hold, but with futures markets pricing a 38% chance for a quarter-point hike. Now, let's redirect back to our local market here in Southwest Colorado. I pulled data across the region, and of course, real estate is hyper-local and each area shares a completely different story. While regional data can get skewed by ultra-luxury pockets like San Miguel County, which doesn't publicly disclose its figures anyway, let's look at Durango, where I spend most of my time. For now, we'll focus on the June numbers, but for the full Q2 report, what I send to my subscribers, you can navigate to the link in my bio. In June, Durango demand had a nice bump. Closed sales jumped nearly 28% year over year, and the median price is up 31% to $817,500. It's meaningful to note that inventory is up 5% year over year, so buyers do have more choices, and homes are sitting on the market an average of 33% longer. If you're seeing different numbers floating around from other agents, here's why. I don't just open up the MLS dashboard, glance at a chart, and call it a day. Although that would be a lot easier. I originally built my own proprietary spreadsheet format back in 2016 when I was still practicing real estate back in Malibu, California. When I transitioned my business to Colorado in 2020, I used that exact same framework to track our local market. Over the years, my assistant and I manually backfilled it with every piece of local MLS data available all the way back to 2009. I hand synthesize these numbers because automated reports can easily miss what's really happening on a broad scale, and it becomes harder to see the trends from region to region. In fact, I have to share my distaste for our local MLS because it makes me feel like I'm doing research on a website that hasn't been updated since 2010. Sometimes I wonder where our dues are going. Anyways, if you're buying or selling, those hyper-local trends matter a lot more than a broad countywide average. If you like the full Southwest Colorado second quarter report, it's over on my website linked in my bio. And if you're curious about what's happening in your specific neighborhood, or if you're hunting for a very certain type of property, please reach out. I'm always happy to pull the numbers and help you understand what they actually mean for your next real estate move.